Happy tax time, everybody. So, some more tax topics, that I kind of want to talk about and kind of maybe help you understand a little bit further, okay? So, there's two common things that benefit you tax wise, and they're called tax deductions, and then there's tax credits. So, maybe you know the difference, maybe you don't. Well, let's talk about it for a little bit. A tax deduction kind of works like a business expense, okay? So, let's say your income is $50,000 and you put $10,000 into your 401k, okay? So, instead of being taxed on the 50,000, you would be taxed on the 50,000 minus 10,000, you would be taxed on that 40,000. Okay? So then how would you calculate your tax savings from that is you would take your tax rate times that $10,000 and then that number would be your tax savings. Okay? It's the actual dollars that you saved. It's not a dollar for dollar thing like a tax credit. Okay? So that's a tax deduction. It's basically, think of yourself like a business. It's a subtraction from your taxable income. All right? So then what's a tax credit and which one's better? A tax credit is a dollar for dollar reduction in your tax bill. Okay? So what does that mean? You have $50,000 of income. Your tax bill will say on that is, we'll just throw out a number to keep it easy, 10%. So you owe $5,000 on that $50,000. Now let's say you got a tax credit for $500. That tax credit would dollar for dollar reduce your tax bill, so then your tax bill would only be $4,500. So, if that made sense, you'll be able to answer this question. Would you rather have a $500 deduction or would you rather have a $500 credit? Which one would save you more money? I really hope you said credit. If you didn't, then I didn't do a good enough job explaining. So, a tax deduction, you just need to think about it like your income is a business and a tax deduction is a business expense, okay? So you just minus it from your income and then you're taxed on that new number. And then there's your tax. A tax credit is figured in after you already know your tax. And then it reduces that tax directly. Okay? Some tax credits can also be refundable. So what does that mean? That means that even if your tax bill goes to zero, you can still get this tax credit refunded to you, which means that you got paid instead of paying in. Okay? What are some tax credits that might do that? Actually, some ones that people are pretty familiar with. The main one, the earned income credit. Ever heard that before? The earned income credit is a tax refundable credit. Okay? That means even if your tax bill is zero, you can still get more money back from this credit. Another refundable tax credit is called the American Opportunity Credit. This is for college expenses. All right. So you pay your tuition. You get a tuition amount that you paid for the year. Enter that in, and then a credit is calculated based off of how much you paid in tuition, and if you're a full-time student or not. So those are a couple credits, and that is also why tax credits are better than tax deductions, because some tax credits can be refundable even if your tax bill is zero. So let's say if your tax bill was zero and you got another deduction, Do you still get more money back after that? No, you do not.